Hello guys, new video here. We're gonna make two parts. Okay, I'm gonna make part one, part two. I want to go walk you through what happened in gold in the last 4 days, that being Friday, Monday, and Tuesday. Thursday, Friday, Monday, Tuesday, starting from Wednesday last week. It is September 26th as I am recording this video. We're gonna switch to our charts and start right away. Part one. Okay, remember part one. I'm going to make a second part of what the projection is going to be. Right now, I want to just walk through how I interpret things so that we can understand. Okay. This is daily chart on gold. Daily chart, and we've seen this awesome push to the downside, just as projected from last week. We were over here. And if you are new to my channel, if this is your first time seeing, please go back. I have about 2 videos in regards to the analysis, precisely this push. Okay, I'm going to make a part one right now, as I was saying, explaining what happened over here with this push up and why are we coming down. A lot of people thought that this push was gonna eventually mean just, a continuation to the upside, but it didn't, clearly. So I'm going to start with doing just my regular homework when it comes to mapping the market. This is part of the job that you need to do always, and you need to map out these areas of strong support and strong resistance. I had these lines here already. This one is just my projection, so I want to have that there. This one right here, 1889, I got it doing this. I go into my line chart, and usually line charts, well, they mark your true high and your true lows. But it's just I have found that it's not, price does indeed, as you see when you analyze it with candlesticks, reach different price levels. So I learned this many years ago, and I forget where I read it or who I heard it from, but using this technique and drawing support in areas like this, it's a safer way of you projecting the market, because sometimes it fails to reach our projection. I don't know if that happens to you sometimes, where you say, okay, I want to put my take profit here, and then the market barely reaches it and it turns back around, and you're like, God, I lost all that. I left that money on the table. But yeah, I put the line here. I wasn't thinking on anything in regards to the price, just this. Okay. Anyway, what happened here specifically? Why did the market stop over here? Well, obviously we have this resistance, and this was from the actually, oh, my mouse is right in September 1st, so from September 1st to the 20th. So you could say this is a pretty much a monthly resistance, right? Almost the whole month the market was reaching lower areas, made a turnaround, and then this day was when the Fed came out and announced that they were going to keep the interest rates at 5.50%, and that usually means, well, it means, I say usually because I also think on how the markets react, but that means positive news for the economy, and usually markets should move accordingly. So in this case, whenever you hear or see or listen to positive news about the US economy or in the world in general, gold prices tend to fall. Okay, that's fundamental analysis. You guys learned that. I'm not going to teach you that. And so what happened? Price made a push, grabbed liquidity to continue falling on the long term, longish term, weekly range term. And after price stopped over here and it closed with this candle. The weekend came, and that's where I made my analysis on, well, how did the week close and what happened? What are we seeing? So I'm interested in this, and I am also interested in this. So this area right here that I just pointed out was a resistance that got broken through, but then the market broke back inside it, and as it turned around to go back up, it closed beneath it. And when I say beneath it, I mean this area now. Okay, so those are the footprints that I talk about. Those are the clues that I say that the candlesticks are showing you. Let's go in the 4-hour time frame because you're going to appreciate a bit more. With the wicks. Okay, these wicks are telling us a beautiful story that gold does not want to keep going higher. Okay, and this price is a price of interest, and I'm grabbing the close of these candles that made a support and the close of these candles that made a resistance, and I'm looking at the wicks to see where they stop and into what range. This one do the wicks go into, and how does it behave? And I just noticed that if you extend this over here, check it out, it's pretty much very much there. So after we see this wick number 1, this almost wick number 2, and finally this third wick get in here and then close them back down, then yes, we must put a line right there, and it matches this over here, because look what happens in the future. We do the same thing. Look at these wicks. They come in here, they grab liquidity, and they get out again. So these are the clues that I want to see, and these are the clues I look for, and this is how I study the market. I don't use any technical indicators. I don't use no magic signal or signal channel, nothing. Okay, so how did we project the fall, the drop, the push, whatever? Well, there's many ways you could do this. You could grab your Fibonacci extension and retracement. I use both in one. So I have my retracement with extensions implemented in them, and I'm grabbing the tip of this candle to the tip of this one. This is my 50% retracement, and these are my extensions respectively. This being 127%, this being 161.8%. The thing is that you have to place them like this in the settings so that they show up like that, negative 27%, but it makes sense. It's 27% more, and you would have it up here as 127, so it's the same thing. Another big clue is the market in this retracement right here did not reach the 50%, and better didn't close into that range of 50 and higher, because if it did, then I would just wait for it to maybe get a little higher, probably even make a double top. But because it closes all of this during all this area here, it doesn't even reach 50%, and it keeps closing under, then it's showing weakness, that it doesn't want to keep breaking up. So you could have set your take profit over here, and you got it pretty much almost immediately when it comes to these sort of moves. And then this is your second level down here, but I'm gonna tell you why I put this here at 1897, and it's the pattern I saw. And it usually means that whenever the markets don't retrace more than 50%, that means they have momentum. to wherever direction they're going, in this case downward. So this retracement failed to reach 50% as you saw. So now we measure this impulse. I don't know if you're familiar with chart patterns like bullish flag or symmetrical triangle or ascending triangle, you know. So you measure these patterns, and this pattern, you measure the first impulse, and wherever the market is, it has its last in this case high. From there is where the push is going to start, the second impulse. In this case we saw it started breaking here, so we could have adjusted this to this wick, but I don't like to force, I don't like to push it so far, you know, because the market doesn't really, it doesn't always, is not always that perfect. It has retracements, it has pullbacks, it has news, so I just leave it there. And if we see that's right on that 1897 price, okay, so that's it. This pattern is called A B equals C D. Okay, okay, my letters are gonna be too small, but you get it. I'm gonna do it with rather a circle. Actually I have my rectangle already. So A B, that's ugly, sorry, thank you, there you go. And I'm showing you like from where to where I'm measuring, yeah. A B equals C, so the C would be from here to down over here to D. You can go on my Instagram, and I have this in a little short video, illustrated, written down, A B equals C D, and you can Google it as well, A B equals C D. Let's just do it. A B equals C D chart pattern. Okay. It comes from these what are these called again? These type of patterns have a name, but whatever. Impulse AB was impulse CD, depending on its retracement percentages and so on. But I drew my own conclusion with time and throughout experience that I don't want to break my head around searching the perfect retracement and oh, it did retrace to 61 and so it is a perfect pattern. These are I forget these names. Harmonic patterns, harmonic something. I just realized through like with the years of trading that hey, it's simple. Like whenever the retracement isn't strong enough, there's momentum, and so I can measure the next momentum's push in many ways. I showed you 2 ways. You could do it through, I guess, however you want it. If you just want to hold until whenever you reach your daily goal, that's also an idea. It doesn't matter. I'm going through my trade. That's it. Okay, and so let's keep going. Almost done with part 1 because part 2 is going to consist on the future. Now, it is important what happened over here. Okay, because a lot of people thought this would be a double bottom, and a lot of people went buying, and they probably lost, right? Or I guess that could be something that if you hadn't seen this and you would see this, you'd say, I guess I could buy, right? But not really, clearly. And so I'm gonna dive real quick into the 1 hour time frame, and I'm gonna leave it there because I have a few videos that I talk in. I analyze 30-minute, 15-minute chart time frame charts, and that's also cool. But I just want to go and walk you through this behavior. So This was the market didn't really break with strength up until here. Of course, it has to do with market sessions. Tokyo doesn't move much. London starts to get volatility. Then the magic hours is when London, Sydney, and New York overlap and whatever. What I want to go through is this. These these three candles over here. And real quick, remember how we draw our areas of interest, taking into consideration these wicks, the closing of these candles. And now I see, look at these candles where they close. This one closes under, this one closes way under, but then we have this push up. And what this is showing me, because it's so fast, 1, 2, this is what I like to say. Okay, this is not, it's not, I don't think it's actually called this, but I understand, and in my mind, I just say to myself, this is liquidity grabbing. The market is like moving quickly toward an area that has been broken to grab more orders and liquidity to continue falling. Actually, this is called a pullback. Like in any textbook, in any book, in regards to trading, this is a pullback. But it really means that there are orders to be filled here because they didn't do so here. And then another logical explanation is when people wake up in London over here, because this little dot over here is when London opened, they're like, okay, it's pretty cheap to buy gold now, right? So let's just buy it. Let's buy it. We can buy this little dip. There has to be a pullback. Or let's wait for the pullback. I'm going to set my sell orders here, my sell limit orders, right? This is what anybody would do after they see a break. So these orders start to come in, they start to get filled. And so that's why the market naturally goes into that area, opens those orders, and the market continues. Okay, so that's something that I know for a fact you have probably not read it somewhere else, or someone hadn't explained it to you this way. Because in my case personally, I learned by myself, and nobody said those words to me until I eventually found someone that I would like to very kindly salute, called Inner Circle Trader. You might probably have probably heard of him, and the way he explains the market is just pure magic. And what I do is I add my simplicity to it, because I also like to trade simple. Trading simple. It's been my brand for almost, I mean, since I started trading. I want to make things simple. So yes, guys, this is part 1. I'm going to now make an analysis on what's about to happen. It's Tuesday. What can we see the coming up days? Okay.